Hello Accounting 101 students. In this video, we are going to go over the journal entries for notes payable transactions with our Chapter 10 end of chapter practice exercises question number 4. And in this problem, on June 1st, Wild Horse Company borrows $80,000 from Acme Bank on a 6-month, $80,000 6% note. And this note will mature on December 1st. So the first thing we're going to start off with is the journal entry for the transaction, which will include a debit to cash, because anytime we issue a note, we're going to have cash received. And we're going to credit notes payable. And the dollar amount that we're going to debit and credit will be the full amount of the note, which will be $80,000 in both your debit and credit columns. The next part of this problem is preparing the adjusting entry. So it's helpful in a problem like this to take a few notes so that way you have it as we scroll down. We're borrowing on June 1st. $80,000 for a 6-month note, so that's the term. The interest rate is 6%. And the note matures December 1st. So now I'm going to scroll down for the next part of this problem, which will be on June 30th. So as the month of June goes by, we have to consider that we owe interest on this note. So we're going to need to record the adjusting entry for interest on June 30th. And then on December 1st, we're going to record the journal entry for the maturity. All right, so we're going to compute interest by looking at the annual interest rate. So we're going to start off with the interest formula, which will start off with the face amount of the loan times the annual interest rate times the time period for which we are computing interest. So in our example, the amount of the loan is $80,000 and the annual interest rate is 6%, so I'm going to put in 0.06 into my calculator. And the time period that we're doing this adjusting entry for is going to be for the month of June, so 1/12. And once I do the math here, I'm going to determine that my interest is going to be $400 each month. So each month for 4 months, we're going to debit interest expense and credit interest payable. So that will happen every month for 4 months. So just as a reference, I'll include our initial journal entry up above this. And the amount we're going to debit and credit is going to be $400 from our calculation. So now we need to record the journal entry at maturity. And we're assuming that monthly adjusting entries have been made through December. So in this case, we need to go ahead and figure out that we need to pay back this loan. So that's the main thing that we're doing right here. We're doing our journal entry when we have to pay back the loan. Obviously, when we're going to pay back the loan, we're no longer going to have that notes payable liability. So we're going to record a debit to notes payable. And this debit is going to be for the full amount of the loan of $80,000. And of course, we're going to pay back the loan with cash. But the amount of cash that we need to pay back is going to include the $80,000 plus the interest that is due. So we also need to realize that in our previous journal entries, every month we're going to be recording interest expense and interest payable. And at the end of the term, we need to pay off the interest payable for all 6 months. So we know that our interest payable for all 6 months is going to equal $80,000 times the 6% interest rate times 6 over 12 months, which ends up being $2,400. The other way that you can look at this is you're making this journal entry for interest expense and interest payable for the months of June, July, August, September, October, and November. And on December 1st, you're going to be paying off all of those payables. So we're going to have $2,400. And then for the cash amount, we need to add up both of these together. So that will be $82,400. So the last question when I scroll down is asking, what is the total interest expense? So the total interest expense will be $400 per month times 6 months, which is the same $2,400. And you'll include that in the very last box. So I'm going to scroll down so you guys can see that very last box where it's asking you for the total financing cost, and that's where you're going to include in the $2,400 in that box. Thank you for taking the time to watch this video.